Okay, now let's look at this question. Now, last week we were looking at the various rates, absorption rates, that we can use for the overhead. And we gave several formulas, if you can remember that. So I want to see this question. So let me read out the end of the question again. It says, the Department of Golden Guinea Breweries had the following data in 2001. So these are the data for 2001. Now this is labor hours worked. Please, this is not in naira. That is why it was not signified there. Labor hours, this hours worked, not the rate. Labor hours worked, 80,600 hours. Hours of machine operation, 72,400. Direct materials used, now this is naira value, 12,200 naira. Overhead charge to the department, 8,120 naira. Direct wages paid, 11,200. Now that's for 2001, what they've incurred. And they already have the overhead. Now they said in January 2002, the first order carried out had the following information. Hours of machine operation, 3,600. Labor hours worked, 4,100. Direct materials used, 640. Direct wages paid, 510. Now they said the cost data of 2001, which is this, represents a fair estimate of what will occur in 2002, like a forecast of what it will be in 2002. If you remember, while I was explaining the under-absorbed and over-absorbed, I said if a firm would have to wait to see the overhead before they fix their price, they wouldn't sell. Okay, so most of the time they use the previous year's data in order to forecast what the other year will be. And then if the actual does not equate the estimate, so that is where we can have over or under. So, as I said, the cost data of 2001, which is that represents a fair estimate of what will occur in 2002. Solution. Now look up. And what they're asking us to do is to get this percentage on direct material, percentage on direct wages, percentage on prime cost, direct labor hour rate, machine hour rate, what we'll pay, and use it to prepare a comparative cost for 2002. Now, if you remember, last week I gave a formula on each of these. How to calculate percentage on direct material, direct wages, prime cost, direct labor hour rate, and all that. So that is what we want to use now. And the first one, percentage on direct material, we said is estimated what? Overhead. Thank you. Over direct material. Thank you very much. That's 100 per one. That's what it. So now we're using 2001 data. Now estimated overhead there is how much? 8,120. So we have 8,120 divided by what direct material there? 12,400. So we have 12,400 times 100 per one. So this divided by this, what do we have? 0. What? 654 times 100. 65.48. 483.87. Okay. So we can approximate to 2 decimal 65.48%. Now this is the percentage on direct material. Remember, I told you to 6 is percentage. So our answers is in percent. So that is the first one, percentage on direct material. And the second one, we say we should also calculate what? Percentage of what? On direct wages. So percentage on direct wages. Now the same thing, we have the formula as what? Estimated what? Overhead. Divided by what? Direct wages. Times 100 over 1. So what I estimated overhead is the same thing as 8120 divided by what are direct wages? 11,200 times 100 over 1. So what do we have? This divided by this times 100.
72.5.
Huh?
72.5.
72.5%. So that is the percentage on direct wages. That's the second one. The third one, same percentage of what? On prime cost, right? What's the formula? Estimated overhead divided by what? Prime cost. Times 100 over 1. Now, I told you that last week, most times they wouldn't give you the express value of prime cost. But once you know the meaning of prime cost, you can derive it, right?
Yes.
Have you?
Yes.
Okay. So, prime cost wasn't given here. But we know that prime cost is the summation of all direct what? Expenses. Okay? And direct expenses include direct materials and what? Direct wages. So, we're going to add them now. So, let's get our prime cost. The prime cost equals direct material. What's direct material? 12,400, have you?
Yes.
Plus what are direct wages? 11,2. So what do we? 23,600, right? Okay. Now this becomes our prime cost. So now let's start substituting to this formula. So we have estimated overhead, which is something as 8120 divided by 23,600 times 100 over 1. What do we have? 34.1? Point. What do you hope about it? 4067, okay? Yeah. So we can have 34.41%. Can this be introduced now? So 34.4%. So that's our percentage of. Okay. Now let's get the machine hour rate. Now I want to know how much they are going to tag as machine hour for the subsequent year. Now machine hour rate, we also give the formula, which is IV machine hour rate is equal to what?
Estimated overhead.
Estimated overhead.
Estimated machine hours.
By machine what? Hour. Please, this is not in percentage because some of you just get carried away. Since percentage, not even in percentage. No. We are looking at the rates they're going to pay at the number of hours they use what in the machine. The rate. Okay? So we now have estimated overhead, which is something as well. 8120. Now what the machine hour use? 72,400. So I have 72,400. So what do we have? This divided by that.
We have 0.112.
0.112,154. I'll say again.
0.1121.
21,547. Okay, let's leave A. So I can have, so it is 0.11215. Let me leave as 0.11215. And what it means, now this is the rate. And what it means is that for every 1 hour they use, they are going to pay this as the rate. 0.1125. That's the rate. So 0.1125 is the machine hour rate. Okay. Now, are you done with this?
No, sir.
Direct. We will not done directly, but we'll jump to machine hour. That means this is V now. So it's meaning IV, direct labor R. So that, have you written this? Okay, right, so that I can claim that. But take cognizance of these values because we're going to use them to prepare the comparative cost. Okay, so let's prepare the direct labor R.
Okay.
So wait, you meant for that one.
If you understand what we've been doing, you can even write it without looking at the code.
Yes.
I said that no day. So the basic thing is not even about copying, it's understanding it. Because in the example, you will not carry this logo, but you carry your head. Right? So we skipped ID. Let's do ID, which is what? Direct what? Labor rate. And what's the formula? Estimated what? Overhead divided by direct labor R, right? So our estimated overhead still remains 8120 divided by what is our direct labor R? Huh? 80,600. Now what the labor use? 0.74. So we have 0.1007. So what it means is that concentrate. Those making listeners now, those just for me. Those that have been here, they have seen this since. Now look up. So what it means is that for every 1 hour that the labor work, they are paying 0.1007. Okay? So we have prepared all this. Now they say we should use it to calculate overhead, which will be charged to the order. Now, B, prepare a comparative cost of that order. Now, what is prepare a comparative cost, which is the factory cost? Remember, I told you the factory cost comprises of the summation of both the direct material and the indirect, or direct expenses and the indirect. The direct has to do with both direct material, direct wages, which will give prime cost, while the indirect is the overhead. Okay? So we want to prepare the B. So the B, our comparative cost, so we have percentage on direct material, percentage on direct wages, percentage on prime cost, direct labor R, and machine R. So we can have our direct material, our direct wages, our prime cost, overhead, then gives the factory. Now please look up. Now we want to use these estimates, this rate for 2001 to see what will be charged as overhead for 2002. Okay? Now for 2002, they said in January 2002, they gave us the value, this following information, and said hours of machine operation 36 hours, labor hours worked 4,100. Now direct materials used 640. Direct wages paid 510. Now if you notice here, there is no overhead for 2002. So we are using the estimate of the previous ones we've done, which is all this, to know the overhead that will be charged, and direct material, wages, prime cost, labor R, and machine R. Now the first one, direct material. Now they give us direct materials used as 640. So this becomes, direct material here is 640. And this is 640, 640, and 640. Direct wages for 2002 is 510. And this is 510, 510, 510, 510, and 510. Now the prime cost of course is what? Summation, right? So which is this plus this, they give us prime cost. 640 plus 510 gives us what? 1,150. Yes. So it's 1150, 1150, 1150, and 1150. Now we want to know the overhead. Now this is the essence of this. Now I want to know the overhead that will be charged. Now the first one on percentage on direct material. Now we are going to use the previous year's percentage to calculate the overhead that will be charged in this regard. Now for percentage on direct material, what was the percentage?
65.48%.
65 what?
0.48%.
65.48 what? Percent. Now 65.48% times the direct materials used. What is what? 640. Now that will give us the overhead that is charged.
But 1,000.
Now look up. Now we want to get the overhead. We are using the previous year's estimate. Remember the previous year we had overhead charged. Now for percentage on direct material is overhead divided by the direct material. So we have 65.48, right? Okay. Now we want to know the overhead that will be charged, that will be absorbed on direct material. Now since we have direct materials used here as 640, so it is assumed that the same rate that we are having for that last year, we can also have that, because they said it's as an estimate, it's a fair estimate of what will happen this year. So to get the overhead on percentage on direct material would be that percentage, which is 65.48%, multiplied by the direct material for this year. So 65.48% times 640, it will give us 65.48 over 100, right? Times 640 over 1. So if we do this, what do we have? 419. 65.48 divided by 100, what do we have? 65.48 divided by 100, that is 65.48%. Times 640.
419.07.
I see 419. 419 what? 072. Okay, we're taking the whole number. 419. So the overhead that will be absorbed on direct material is 419. Do you know how we got this? Huh? Only 3 words. Now look up. Now for this year, they've not incurred overhead, but we have to fix a price for the product. So they are using the estimate of the previous year's overhead to know what will be charged for this year, so that they can get the factory cost of production. So if they get the factory cost of production, they can now determine the price of the product. Because they have not incurred any expenses for the year, but they should determine the price. So that once they start producing, they start selling to consumers. So now they've known direct material, because that is what they will use to produce. They've known direct wages, that is what they are paying those that is working. Now the prime cost is the summation of this. Now the overhead, we said these are indirect expenses. So they asked us to use the ones they incurred for last year as an estimate of what will happen this year, which was what we did here for each of these: percentage on direct material, direct wages, prime cost, direct labor, and machine hour rate. So we got a percentage for last year as 65.48% on direct material that was absorbed on overhead for last year. So we want to use it to estimate what will happen for this year. So we are using that percentage, multiplying it by the value of the direct material for this year, which is 640. So we said 65.48% times 640, which is the direct material for this year, to know the overhead. So 65.48% is something as 65.48 divided by 100 times 640 is the value for direct material. What is this? So this gives us, according to what they got for me, 419.07. Yes. you leave to the nearest whole number. Of course, you know what is whole number. You leave to the nearest whole number. Had it been the value here was up to 5 and above, we would have approximated this, right? So since it is not up to 5, so we can approximate, so we leave this like this. Did you get it? So that is 419. So that is overhead that comes up on direct material. And the next one is for direct wages. Now, what to know direct wages? The same thing. We calculated percentage on direct wages.
72.5%.
72.1? 5%. Now, you multiply it by the value of direct wages for this year, which is 510. So, that is 72.5 over 100 times 510. What's up?
That's 369.75.
That is 369.1?
75.
75. So we can approximate to 3. Now this is up to 1. We'll take it here. This is 10. 0 will take it here. So this becomes 3 what? 70. Right? So we now have 370. Any question there? Okay. The next one is percentage on what? Percentage on what? Prime cost. The overhead that will also be absorbed on that. Now, the same way, no prime cost is there, but we added these two together as prime cost. Right? So what is the percentage on prime cost?
34.41.
34.41%, right?
Yes, sir.
Times the value for prime cost. Prime cost is 1150. Right?
Yes.
Okay, so to get this now, we have 34.41 over 100 times 1150. So what do we have?
395.71.
I'm looking. Now I'm saying this now. 3 9 what? 5.715. So we can approximate to 396. So I can have 396. Right? Okay. So that is. Now I want to get the direct labor hour rate. Now, how much they are going to pay. Now for last year, we had direct labor hour rate as what? 0 point direct labor. 100 So now here they said labor hours work. We worked 4,100 hours. So we multiply that of last year, the rate, times the hours they worked, which is 4,100. What do we have?
413.034.
413.03 what? 4. Right?
Yes.
So this we can take 413. Now the last one is machine hour rate. Now we also have the estimate for last year, which is 0 point what? 11215. Okay, multiply it by hours of machine operation for this 36. So multiply by 36. What do we have?
403.74.
403.74. So we can approximate to 404. Okay, so our factory cost now will now be summation of the prime cost plus overhead. So this plus this will now give us this. So 1150 plus 419. What do we have?
1569.
1569. Then the next one, this plus this is what?
1520.
1520. This plus this is what?
1546.
1546. And this plus this is what?
1563.
1560. And this plus this was what?
1554.
1554. And this is the comparative cost. And this is what the absolute. Okay. So this is the first part.